Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Tuesday, April 3rd, 2007. The market's closed, and we had a bullish day today. The Nasdaq finished up 1.3%, S&P up a little more than 1%, and even the semiconductors were up, as we'll see momentarily. But yesterday we started seeing that there were signs that the market was starting to become a little bit more bullish. I had noted that the inside day yesterday typically occurs near a turning point, as I said, and that these long tails on the daily time frame suggested that the buyers were gaining control intraday. And as we had seen numerous tests of this prior resistance level that has been holding as support, that it looked like maybe the market was getting ready to turn a little bit. And then looking at the 10-minute time frame, we had noted that the rate of descent for this 5-day moving average was starting to slow down. We'd had the late day strength that's come in the last 3 days in a row. And then I said basically getting above 43.75 to 43.80 could lead to a move up towards about 44.50 or so. And we did get a gap up above that level. The market quickly ran over anyone who was foolish enough to sell it short on that gap opening. A lot of times people look to fade gaps. I don't really think that's the right way to go, except when you're moving with the trend. For instance, if we had been over here where the 5-day moving average had been declining and we're below it, then fading those gaps is often a good low risk trade. But on a day like today, when it gapped up above this resistance level, selling it short initially doesn't ever make sense, I don't think. I think you want to, if you're going to sell short, you want to wait to see that level of prior resistance does not hold as support, and then to sell short any weakness thereafter. But if we look at a 1-minute time frame, you can see that all day long the market did hold above its daily VWAP, that is the volume weighted average price, and we'd seen just a real nice, big volume moves up, followed by low volume consolidations, another big volume move up in here, and low volume consolidations on and on again. So we saw a little bit of volume coming in back at the end of the day as it sold off just a little bit, just some profit taking. But it did hold above the average daily price, and you have to look at it as nothing but bullish here. I think there's nothing negative to read into here. I'm sure people are saying, well, we're now up at resistance. We're at a potential level of resistance. We're at an area where this market has seen a little bit of resistance in the past, but getting above this level would create a higher high to go along with this higher low right in here where the resistance did hold as support. So I think that maybe not, we don't get it right away, but above 44.45, again, we're going to probably take a lot of short sellers off guard, and that's going to be the catalyst for continued upside in here, because there's a lot of people still leaning bearish in this market and not wanting to believe this rally. And I think it's more of a neutral range-bound market is kind of my official look at the trend in here overall on a daily time frame. But when we look at the shorter term time frames, these are the trends that we want to take advantage of trading wise anyways. So these are the ones that really matter most. In short term, we're in a very good little uptrend here after today's rally. The S&P 500, as we saw yesterday, was actually more bullish than the Qs. That is that this 5-day moving average has been tested a couple times over the last few days. We had these higher lows, and we then this morning, this market also had a very clean break of resistance with that gap higher, and then continued to move higher throughout the day. So yesterday we were looking at the 142.50 to 142.80 level as far as where the resistance area was, and you can see we gapped right up above that level. Early on, it held onto those gains initially, didn't make a lower low in here, and then the market really took off as the shorts realized they better hurry up and get involved and cover some of their positions before they get really run over, which is what happened. So this market did make it up to a higher high, but wasn't able to close up above that level. Looking at the daily time frame, though, we've kind of got the same picture as the Nasdaq, and by that I mean that we've got this prior level of resistance right in here, acting as support once again, and we're on the Nasdaq as well. We're back above that 50-day moving average, which is nice to see. So it looks like, for now at least, that the buyers are back in control of the short-term trend, and that fighting this trend is going to get what fighting trends typically get you, which is losses. The IWM, the Russell 2000, Here, this market was also strong, but not as strong as the others. It was up 1.03%, so it was about the same as the S&P 500. But this one also came up to the top end of its range and was able to push above the resistance level that we were looking at in here at about 79.95 to $80 level. So it broke above that and continued to move higher. And again, I think a lot of today's action had to do with shorts being covering. Yesterday, I believe I pointed out the potential of this inverted head and shoulders pattern, which would then give us an upside target of approximately, what did I say? We've got about $1.50. Add that to 80, maybe 81.5 or so. 81 and a quarter, 81 and a half. So this market could be heading for this gap area in here, and if it's to close that, then I think you really see the shorts get squeezed, and maybe we're off to all-time highs on the IWM. We're not that far away from it, so you have to keep that as a potential consideration. The semiconductors were kind of concerned that if it broke below 33.20, there would be potential. There'd be reason for concern rather. And the market was able to hold above that and it gapped higher like the rest of the market. But again, here you're seeing underperformance. They were only at 0.6%. You can see that sellers came into it late in the day. There was a big volume at the end of the day. I don't want to read too much into one period of volume, but on the 30-minute time frame, where did it come up to? It came up to this prior level of support, right around this 33.90 level. So I think pushing back above this level would give semiconductor holders a reason to breathe a little bit easier, but they're still in a longer term, just neutral sideways range. Kind of bullish to see it back above the 200-day moving average, but I don't really think that means too much. So overall, though, great day for the markets and good day for bullish positions, except for IMMR, which we got involved in yesterday at $9.10 a share, and I had suggested raising your stop to 9.04. We stopped out of that one with 6 cents on the downside. QUALCOMM we got involved in yesterday, just above $43 a share. We had raised our stop, and we're going to raise it once again. Let's raise our stop to $43.45 in QUALCOMM. And Adobe, ADBE, this is one that we looked at for today. We were looking for a pullback initially, and I was kind of hoping, overall I was kind of a little bit annoyed by today's gap because a lot of the moves that I was looking for were pullback plays, and this one gapped much too high for me to take advantage of. So there's no trade in Adobe. There was also no trade taken in CDNS based on what I had outlined. And yesterday I had noted the late day strength here that that I was hoping for a pullback maybe towards about 21.15, then to buy strength. The stock just gapped higher and continued running, so no reason to take a trade in that one. Open text, OTEX. Here's one that did give us the opportunity to get involved as it broke above $21.15 today. So let's raise our stop to break even now in open text. And then we had taken a look at MDRX as far as a short sale candidate under $26 a share. That trade never triggered either, so no reason to take it.